Welcome back, audience, to another episode of FinTech Fridays, and welcome back, Stephen Cooley, a
How you doing?
returning guest. I think this is your third time on the show.
Maybe
Wel-
three or
Welcome back.
four. I don't know. You're very nice to me.
Could be third or fourth. I always enjoy these conversations because
Likewise.
we say we have a plan going in, and then I just love the way your mind works. We end up down a couple different paths, which we'll get there today, I'm sure.
Yeah, it's not always a good thing the way my mind works, which is maybe part of the problem why we do veer into the high critique from my wife and friends and staff and
Yeah.
focus.
Well, let's dive in, man, because I want to at least start our conversation down a path with our who's usually listening to our show, which are mortgage loan officers,
Yes, of course.
and I just want to make sure that the audience really understands the power of mortgage advisor tools
Sure.
from their seat, from their perspective, right? And so, if you can just indulge me for a moment,
I,
Mr. Cooley, uh,
Absolutely.
if I'm a brand new loan officer into the industry, why should I bookmark mortgage advisor tools rather, on my browser? And I'll hit go, and you let her rip. Let's go.
Yeah, I have an NMLS number actually. I cut my teeth in the business for about a half an hour, selling reverse mortgages in a call center before I was, promoted-ish and promoted. And but so it's allowed me to like take a peek into different Facebook groups or Reddit groups that for various reasons, R&D and whatnot. And I mean, you have, and without a doubt, you have a lot of folks asking, their peers for recommendations. I mean, they're looking for, what CRM do you use? What borrower retention tool do you use? They're hungry for information. What marketing automation tools do you use? What email service providers do you use? And so, I mean, there is a real thirst for information and understanding what resources exist in the marketplace. And of course you go to your peers and you're trying to understand what works for them and they get responses and good, bad, or indifferent. And there's not a lot of context around why they're asking. Are they replacing something? Are they starting something? Sometimes there is, but I mean that is par for the course. And I mean you have a lot of movement occurring in our industry right now, whether you're becoming a broker or you're changing lenders or everyone's kind of we're recalibrating a bit, and so there is but no, there's a thirst to understand what could help them improve their business. I think you just said you went checked out the Housing Wire thing. 90,000 loan officers do one loan a month, and
Yeah.
that's an active loan officer. And I mean, and if you're an ambitious, loan officer, you're trying to achieve that, and you want to understand is there a technology angle there that can help me achieve, those goals? And so, what we have done is centralize this so that they can examine everything that is in the market that could potentially serve them. And our vendors are, we ask them, what market do you want to serve? What industry sector do you want to serve? And so they identify if they are interested in serving individual loan officers versus, regional versus banks versus credit unions versus wholesale versus retail. And so, I mean, they can understand, quite a bit what services are in market, and that will help them as an individual. And so, that is, to stop from getting aimless, responses in a search group or which is not bad at all, but like to really fundamentally understand what is in the market that I think could help me improve my business and help them learn, guide them to and point them to the direction of where they could go and learn more.
So I've got the website look over here on the right, so you'll see my eyes wander over there.
Oh,
But
you're good. You're
there's
good.
a method to my madness. Um, so I'm a loan officer, and I want to know, you know, what other CRM opportunities are out there potentially, right? And so I'm typing in CRM, hitting go, and boom, there's 1, 2, 3, 4, 5, 6, 7, 8, 9. There's
Yep.
15 plus CRMs, and I'll say CRM actually is probably closer to 30 now that my screen just updated. So you guys have the way I would position this for a loan officer is this is like the Yellow Pages meets Google reviews meets Reddit
Yeah.
for in our case for all service providers that primarily serve the housing finance industry, right?
Good.
And so what I love about the platform when I put on my loan officer hat is I can see everything that's out there. And then depending on the company I'm at, of course, I may not have access to everything and I can kind of narrow down from there. But if I think about what typically happens with technology or service buyers, whether it's a loan officer or an enterprise, I would start my analysis at mortgage advisor tools. And by the way, there's a lot of reviews in here, guys, just so you know. You may not ever have to leave this platform, but if you felt like you needed to go beyond the platform for additional validation, that's when I might go to somewhere else that
Absolutely.
whether it's a chat group or a Facebook group or whatever.
Well, I mean, here the example would be, where do you start your car purchase?
Right.
I mean, I go to cars.com. I have the app. I mean,
Yeah.
I'm looking for, okay, what would this cost? What would, and I start it there. Like, are they in my area? I'm starting to check off the boxes of what would qualify a car for me to buy.
Right.
So there is an element to that where it's like, yeah, I mean, we are kind of inevitably going to be a part of that buyer journey. We get, actually, I just looked, 600. We return results for 600 searches a month that revolve around the terms CRM for loan officers, best CRM for loan officers. What is the best CRM for loan officers? Free CRM for loan officers.
Yeah.
So, I mean, by proxy, even if you do go to Google and you start asking questions that are relevant to what you're looking to find, there's high likelihood you're going to end up on our platform anyway. And I mean, ultimately, it's completely free. I mean, again, we have put a tool in the market to help people get connected and learn more about what exists. I mean, that's the objective. I mean, the only way we innovate, I mean, is to understand what's available.
Yeah.
I mean, at least at a minimum know that there is, what's a free tool for free CRM tool for loan officers. I don't even know what the answer to that is, but I'll tell you this, last month, 22 people wanted to know the answer to that question.
Yeah.
We were able to, provide some guidance. And so it's a resource. It's a hopefully an important resource for any loan officer on that journey of trying to replace, supplement, or finding new resource of any kind, not just CRMs, but any kind.
So you and I were talking about this before we hit record, but it was something I knew I wanted to kind of poke at.
Yeah.
You shared a pretty cool, interesting, and eye-opening and somewhat concerning stat as a technology seller.
Sure.
Talk to me about this 95.5 or the other inverse 5.95 kind of concept.
It's changed our value proposition quite considerably, but quite simply, at any given time, only 5% of your total addressable market is shopping for your solution. And this isn't a business rule that I made up, but I mean, it's called like the 95.5 or 595 rule. And it's prevalent in B2B business. And so, applicable to the mortgage industry, if we believe that there's 5,000 lenders that are in our space, that means only about 250 of them are in market for our solution. And we talked about loan officers, and if we talk about the 90,000 that are active, those are ideally going to be the customers we want. So that's 4,500. And so all of a sudden we're forced to reassess. If we understand that rule and believe it to be true, we would likely reassess how we're spending our marketing dollars, where we're going conference wise, how we're advertising, and what activities are we doing to actually catch that market, and then how much of that market do we really believe that we can capture? So it just brings I think a real understanding of what is good and bad, as far as a sales cycle and a quantity of sales per year, depending on what your model is.
Yeah. Yeah. If I always get value talking to you, by the way, but that right there really was an interesting metric for me. And in a way, it's a little little concerning, but at the same time, it really helps narrow the focus, and by the way, I think I believe the stat. It intuitively feels right,
Sure.
especially for B2B. And so it does mean you have to be laser like in your message and in your content, and then in how you go about searching for that 5%, which, for all of my kind of cohorts in the technology sales space here, you should be looking at mortgage advisor tools, because by nature, the people that are on that site are in the market. They're actively shopping with some level of intent.
So yeah, I mean, you can't arrive at our site as a lender without searching something like I just read, find me a free CRM for loan officers. I mean, there's massive intent behind that. What are prices of CRMs? I want to understand the reviews of this company, and so by proxy, I mean, we have an SEO infrastructure that, for thousands of search terms that are all mortgage technology and service driven. And so, yeah, I mean, we return results based on those inquiries. And so what we've done that's kind of changed, kind of our path, is we've provide a shopping list, of the folks that are shopping for, if you're a vendor verified customer, you receive a shopping list of who is actually in market to buy your category of solution. And so that's nowhere else can you get a glimpse of that. I mean, conferences are going to give you an attendee list, no intent on that list, either there. And so, you can kind of assess intent, based on your call to action and your advertising. And so that's definitely a way to do it, depending on how good you are at that. But outside of that, I mean, we have a way to provide you a monthly understanding of who's in market for your service. And so that's kind of opened the floodgates a bit for us, because now you can actually market and advertise and message with a little bit more concise, and stop wasting time on it's talking to a half dozen lenders or so, especially in the last month. I mean, the questions of when do you plan to buy have started to be have become more important. Really finding them in the sales cycle and their pipeline has really shifted quite a bit, because we're kind of bringing to light that there's definitely people buying.
Sure.
I don't care about the fact that the market went down or up. That's irrelevant to the truth, which is people were still buying. It's just it's just it's shifted a little bit. And so if you have a pipeline full of people that are not buying, which is possible, I mean, you probably had a rough go at it for the last 6 months.
Right. Well, Steve, like I said, I always learn something in these conversations. I appreciate you returning to the show. We'll probably do this again, sometime in the winter months. But man, thanks for coming on. I appreciate it.
Nah, man, you're the best. Thank you so much for your support. Always love doing this. Thank you.
And everybody, thanks for tuning in this week. Come back in 2 weeks for our next episode of FinTech Fridays.
Awesome.